Yeah, exactly. Everybody's looking for that trap door. I mean, Thursday through Monday, a lot of twists and turns. And then we had this late day sell-off, negativity. I mean, good grief. Yesterday at 2 o'clock Eastern time, the perceived market on closed sell orders were about $250 million. Not that much. 1 hour later, it hit at $850 million. And all of a sudden, we're just falling out of bed for no particular reason whatsoever. I mean, it's not so much what's happening. It's really not what's not happening right now. We're being dominated by a lot of negative bias, and people just seem to dismiss any positives coming out of the market right now.
Yeah, I mean, there was some views earlier as we were watching those gains, slight recovery from the losses of yesterday, that maybe perhaps, you know, investors were taking more the micro view, back to the sort of company focus rather than all the macro worries, given, you know, all the earnings starting to come through now. But maybe perhaps not.
Yeah, no, you're exactly right. And let's keep in mind, there's a lot of psychological damage done to the market, and it's going to take a while for us to heal and recover from this. With that, there's a lot of people nibbling at the market, recognizing that the S&P 500 right now is trading at 15 times earnings. If you look at 2015, implying $130, but there's no heroes right now. There's nobody stepping in and really buying the market. A lot of nibbling, and it doesn't take much for it just to go hither or fro, as we're seeing here in the late trading in the U.S.
Energy stocks taking a hit. We're watching the oil price absolutely tumble after the IEA cut its forecast for demand. Yeah, just take us through what you're seeing there. I mean, down 4% on those measures.
Yeah, you know, I tend to be an outlier. I mean, I fully acknowledge that demand has slowed down, especially in product demand, diesel demand, when you look at India and some of the emerging markets. However, I think the whole thing is really more supply-oriented. I mean, who would have ever guessed that Libya would be pumping out as much as they are right now? That was one of the biggest supply risks going back to January of 2014. And the same goes with Iraq. I mean, OPEC in general has not dialed back on its supply and, in fact, cut prices. So with that in view, it's just flooding the market. Some people think that they're trying to get frackers in the United States out of the market to get oil back to where it deserves to be. We'll see if that happens. But again, I do think it's a lot more supply-oriented, and the demand stories are definitely true, but not as big as the supply.
Just in terms of what the Saudis do, I mean, there seemed to be the view that, OK, we can live with these low prices for now, but maybe perhaps some contradiction coming to that from one of those key Saudi princes. So, I mean, what do the Saudis do, and how key is that?
Yeah, it's hard to know because it's a lot of news, or a lot of headlines, but no real new news. I mean, we're hearing that U.S. will become uneconomical at $90 a barrel. I'm not sure that's true. I mean, it's beginning to be true. Some people think it's more closer to 70 or 75. The fact is that they have not cut output. They've lowered their prices. Sure, they're trying to get the U.S. out of the market a little bit, keeping their percentage of the market. But there's so many cross currents right now, and it's going to be fun to see how it all plays out.
Just on other commodities, though, I mean, you're getting the sense that maybe there's a bit of a bottom forming?
Well, I think it depends on what you're talking about. When we talk about zinc or lead, sure, I think that's a really good buy and is continuing to perform really well. Copper, I'm not so sure. I mean, I'd like to bottom pick right here, but I think that's another supply issue where China is a lot more willing, a lot more apt to import raw material and less refined material. And the fact that so much of that has been hung up in financing deals over the last 3 years, suddenly there's more supply than people know what to do with. So it's really hard to know. I do believe if there's one commodity out there that I would really buy right now, it would be soybeans. But I think that's going to be the first year in deficit in a long time. It's not the same as corn. I think it's going to surprise to the upside.
Just on Europe as well, how much of that is still an issue for investors there? How much of a talking point is that? I mean, we had, you know, more grim data out through the session there. And the Germans, though, still seeming to be sticking to this view that they want a budget, you know, a balanced budget. They want to stick to that goal, you know, even though we're seeing this weaker growth and the sense that Europe's heading back into recession. Yeah, you got to love it. I mean, I wish America would take the same view of a balanced
balanced budget, even if it hurt for a little while, because it surely would hurt. But let's keep in mind that a lot of people are citing the 3 really poor economic indicators that came out of Germany last week that tipped the cart of the stock market Thursday through Monday. It's funny because those numbers were not good. I'll admit that. However, I don't think they were completely narrative changing to the growth in Europe right now. I mean, we know that Europe's not. I mean, they're still in expansionary mode, but they're not growing as well as they should be or could be. But they haven't for years. I mean, the fact that they're in expansionary mode is a good thing. So dialing it down a little bit, yeah, it hurts, but I don't think it warrants the near 10% correction that we've seen over the past 3 days.
So where do you see the markets going from here, the equity market in particular? I mean, do you get the sense that there will be a recovery, or is it heading for technical correction?
Yeah, no, absolutely. I think there will be. We will recover from this. It reminds me a lot like last February 3rd. Actually, I was on television with you back then when we had like a 6% sell-off. S&Ps were down 40 points on a bad ISM number, a bad auto sales number, and it seems like stocks were afraid of stocks. I mean, the news was not good at the time, but people were more afraid of the volatility in the market, the gyrations of the market, than they were of the actual fundamental landscape. And I think the same is true today. I think we're going to have a bounce back. Acknowledging that psychological damage has been huge. It's going to take a lot of therapy to get us back to where we belong, but it's going to happen.
Larry, great to get your views as always. Thank you.